Yeah, look, they said that I couldn't do it, so I went and did it. W's only, you know I've been winning.
It's the Money Doc here, and you know it's time for that money hack. And today, we're gonna dive into something that's been evolving over the last couple of years, and that's literally the bank on yourself era. And you know, a lot of times I always say this: the highest form of ignorance is rejecting something we know absolutely nothing about. So today, the bank on yourself era, I want you to think about it just as it sounds: banking on yourself. Over the years, the financial system has been making people upset, angry, lost, confused, and concerned. And the number one reason behind that is because they're hoping that the system will take care of them the way that they would like to. And if you think about it, back in the day, baby boomers' biggest fear was public speaking. If you can think about it right now, baby boomers' biggest fear is outliving their life savings. The reasoning behind that is no one is communicating or even sharing with them, what it's really going to take for them to get to their destination, which is retirement. And everybody at some point in time in their lives will want to retire. So what I want to share with you today is the bank on yourself era. This concept has been around for 160 years, okay? This is just private information officially going public. And the biggest thing here is, in order for you to see the value, you have to see things differently in what I'm going to share with you today. So if you think about it, how much of your financial security depends upon things that you cannot predict or you cannot control? And as you think about that, now let me answer the question. This is the number one reason why most baby boomers fear right now is running out of money, because they don't understand the vehicles that they're leveraging. The bank on yourself era literally allows you to put unlimited amount of money in a strategy that allows you to leverage it, right? To be able to buy a home, buy a car, pay off debt, send your kids to college, and there's so much more. But in that same concept, you're literally leveraging something called living benefits. Because what this account is, you're literally leveraging tax code 7702 subsection A, which is insurance. So most people think that they're putting their money in insurance, and all you're doing is leveraging insurance. Let me say that again. You are leveraging insurance because they teach us to insure the things that are important, but they never teach us how to insure the things that are of value, right? So the things that are the most valuable, we never learn how to protect them. So those baby boomers that are panicking right now, that's literally because no one showed them how to protect the most valuable things that they need to protect, which is their health and their money. So the bank on yourself, era literally allows individuals to leverage this tax code 7702 subsection A. It is just a supplemental vehicle. It's not taking away from anything you have. It's literally adding to everything that you currently have and giving you a more solid structure. So when you leverage this account, it allows you to put an unlimited amount of money. It allows you to design it the way you want it to be designed and be able to have guarantees. Yes, I said guarantees, because putting your money in this vehicle, you are not losing any money because you're literally mirroring what the market is doing. You're not actually participating in the market. So imagine this. If individuals understood that they can build wealth without having to gamble their life savings, imagine saving over the last 20 years, compounding your interest on your money and not having to worry about losing it. But not only that, here's also how bank on yourself era works as well. The insurance that's around the money plays a key part. Not only does it keep the IRS out, away from your funds, but also it gives you the ability to leverage what we call living benefits. I want you to think about this. 1 in 3 Americans get cancer, 1 in 3 gets diabetes, and 1 in 4 gets a stroke. So ask yourself this question. If you get sick today, cancer, diabetes, or stroke, and you cannot work, how will your family survive, right? How would you be able to take care of your finances? Because the number one reason why most Americans file bankruptcy is because of medical bills. See, the bank on yourself account allows you to leverage that same insurance plan to be able to cover down medical bills. So as you're going through it, ask yourself this: what do you have that you guarantee can bank on? If you get sick, you want to retire before 59 and a half. You want to be able to buy a home. You want to be able to send your kids to college. And the rate of return on this account is higher than the rate of return on any other vehicle, because the easiest way to build wealth in America is through uninterrupted interest. Because if you think about it, uninterrupted interest will compound faster than simple interest. So today, I want you to leave this video and ask yourself, what do I have to bank on? And if you don't have anything to bank on, make sure you put a massive action plan in place and stay blessed and be blessed.